Welcome to the Finance Report. I'm Mallory Hoff alongside David Wilkinson and our guests Rick and Granger Hughes. Over the next half hour, we'll discuss planning for a successful retirement and why so many people in this country are missing the mark.
So here's what's in store. It's about building your retirement plan, a written retirement plan. Then in 15 and 15, we'll discuss income, taxes, and growth strategies, plus how market volatility can change your outlook for retirement.
But first, joining us now are Rick and Granger Hughes. The father-son duo are part of the team at Hughes Retirement Group, a Chattanooga area firm that focuses on preparing people for retirement. Rick and Granger are also popular radio show hosts. What are the keys to building a truly successful retirement plan?
Mallory, I believe one of the biggest things is sitting down with us and developing a plan. We need to know what someone's portfolio is. We need to know how much net income they're going to need in retirement.
Sure.
Because people say, is there a magic number? Do I need a certain amount of money? And that's not the case.
Yeah.
Because somebody's $1 million may not work for somebody else. Okay, so that's very important to begin developing a plan.
Yeah, and to that point, I would also say, looking beyond, once again, just market gains or losses, you have to look from a healthcare standpoint, whether that be Medicare, whether that be long-term care. Do I have the right risk for my portfolio, for my age group? Am I properly planning for Social Security maximization? Am I planning for taxation? So all of those things are going to go into making a proper retirement plan.
How critical, though, is it to get a written plan in order to have that successful retirement?
I think it's very important. You're setting goals for yourself, and when it's written down, you're more apt to follow it, okay? Because if no one knows what you're trying to do, then if it doesn't work, you can come back and say, well, that wasn't successful or whatever. So having a written plan is very important, and that's something that Granger and I do on a day-to-day basis.
And let's talk tax planning for a second. What role should tax planning play when it comes to your retirement plan?
You know, tax planning is huge because we know the tax code we're presently under is going to expire December 31st of 2025. So we believe taxes are probably going to go up. So you got to ask yourself a question. Do you want to keep more of your money, or do you want to give it to Uncle Sam?
Keep more.
I think we know the answer.
And it's like we talk about a lot. People are so concerned about, am I making or losing money in the market? But they're not planning for potential tax increases. So once we write that check to Uncle Sam, there is no, hey, I'll just hang in and wait for that money to come back. It's gone forever. So we're potentially looking at thousands, tens of thousands, maybe even hundreds of thousands of dollars wasted in taxes that were paid that we may have not had to.
If we're talking about these type of numbers, up to hundreds of thousands of dollars, how on earth is this critical element of retirement planning getting missed?
I think it's a couple different reasons. I think people look and they think, hey, maybe I'm going to be in the lowest tax bracket when I retire. What's that bracket going to be? We don't know. The Congressional Budget Office says if things go unchanged, you're looking at 25% being the lowest tax bracket. I think another factor is you got to pay the taxes.
Sure.
You're not getting around it. There's a difference in tax avoidance and tax evasion. We know what that difference is. So I think it's very, very important to make sure that when you're sitting down with somebody, showing them, hey, here's the benefits of paying the taxes today because we believe they're on sale.
I want to talk market volatility for a second. So many people obviously did so well during the longest bull market run in history. They've been going it alone for a very long time. Now they know they need to make a change, but maybe they're not quite sure how to go ahead and do that. What's your thought?
Well, if you look at market volatility, what we've faced in 2022, the Dow's down 19%, the S&P 19%, NASDAQ down 33%. Before this all happened, most people wanted to be in the market, and we had the longest bull run in U.S. history. So that's the direction they wanted to go. I had a call the other day from a particular client that said, Rick, I want to do something that has zero risk. So volatility is on their mind. They've lost a couple of $100,000 because they were in the market. So that's a big topic.
And I would also say, if you're a conservative investor, aggressive, moderate, whatever you are, you don't have to invest your entire portfolio that way.
Sure.
You can divvy up your funds. Say, hey, this portion of my funds, I want to be a little more aggressive, but the main portion for retirement, I want to make sure that I'm not taking too many risks because I can't afford another 2008.
Yeah.
How have you all seen income planning really help some people reduce their dependence on the market?
I think it's big because the biggest thing is most people don't want risk on the income side.
Yeah.
Okay, if you're relying, let's just say, on your 401k, well, you're in the market, so you could lose. So look at income almost as like a pension in a sense. I know pensions have kind of gone by the wayside, but most people expect to get that check the rest of their life. And if you're building a plan like we do to age 95, for most of our folks out there, you want to make sure that income's going to be there till the day you die.
And to that point, I would say, you're used to getting a paycheck. And now you have this bucket of money that you need to create income from. So all of a sudden that can become difficult to figure out how much do I need to take. And if you have a proper income plan, then if you have a 2008 or a 2020, you're not having to dip in and take excessive losses because you've already got your income needs met.
Yeah, absolutely. Some important information, which means the time to act is now. Today, exclusively for our Finance Report viewers, Rick and Granger have a great offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 423-401-9933. That's 423-401-9933.
Today we're breaking down the retirement planning process, and this includes Medicare supplemental options. What is the normal time to sign up for Medicare?
Let me state this first. Medicare can be very confusing.
I'm glad you said that.
Seniors out there all the time are asking, what do I do? So let's talk about the window of time.
Okay.
You have a 7-month window when you're getting ready to turn 65. 3 months prior to your birthday month, then your birthday month, and then 3 months after. Now, why is that important? It can potentially eliminate you paying penalties. That is very important. Now, I will say this. If someone's continuing to work, they do not have to sign up for Medicare Part B.
Okay, so are there penalties if they don't sign up when they're first eligible?
That is true. There are penalties unless they have insurance through their group employer and maybe they want to work to age 68 or 69 or so forth.
I think a lot of people are trying to tackle this themselves. What are the benefits of working with a team like you both as you try to figure all of this out?
Well, look, I think it's a holistic approach, as we talked about. I mean, whether it's managing your money, whether it's tax planning, whether it's long-term care, Medicare, whatever it may be, you're getting that holistic approach because we want to save money, right? And if you don't properly plan for Medicare, you're potentially costing yourself thousands of dollars.
Sure. I know you guys get this question a lot. Do you offer a wide variety of carriers?
We do. I mean, it's the same thing on the investment side. I mean, we try to act in a fiduciary capacity to make sure that we're putting the client's interests ahead of ours, obviously.
Yeah.
So we do offer a lot of different carriers, major carriers, so that we can help find a plan that's specific for that individual.
You just mentioned the fiduciary standard. I want to circle back to that. I think that's something we're all hearing a lot about of late. What does that mean to both of you?
I mean, once again, it's putting their interests above ours.
Yeah.
It's putting their retirement above our paycheck.
And it comes down to this, Mallory. You just mentioned we carry a lot of different products and so forth with major carriers. It doesn't matter to us what you do. We're going to educate you on the ABCs of Medicare. We're going to let you make the choice.
Really important information. And coming up in the Finance Report, we'll discuss the stock market and the ups and downs that can occur with your retirement. And up next in 15 in 15, David will put Rick and Granger on the clock.
Rick, are we really looking at nearly a third of our money going to Uncle Sam?
We could be unless you have the right strategy.
But first, exclusively for our Finance Report viewers, Rick and Granger have a great offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan just for you. This will allow their team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call right now, 423-401-9933. Once again, that number, 423-401-9933.
The clock is ticking towards your retirement, so that brings us to 15 in 15. 15 topics in 15 seconds. You boys ready to dive in?
Ready to go.
All right, let's get that clock going. Question number 1. How much money will you need to retire? According to a survey, more Americans than ever believe the magic number is $1 million. So Granger, is $1 million the magic number for retirement?
I don't think a magic number exists unless you know how much you're going to spend. I think people get caught up in $1 million, $2 million, $3 million. But if you don't know how much you're going to spend, you don't know how fast that asset's going to be depleted.
Okay, so is there such thing as a magic number, though, for retirement? Do you buy that?
I don't buy a magic number. I agree with Granger totally that it depends on what your net income needs to be.
Okay, so don't chase a magic number if you're doing that. All right, we're going to transition to what he just mentioned, piggyback off of it. It's understandable to have some concerns, perhaps even some fears when it comes to using our savings in retirement. So, Rick, what needs to be done so people can spend with confidence?
Well, you need different streams of income, David. Everybody needs an emergency fund, okay?
Sure.
But you also need income, whether it be Social Security, pension, possibly from an IRA or whatever.
Yeah, we've talked about it. Multiple streams of income can be very powerful for your retirement. Question number 3, what if I told you 45% of people who do not have an advisor believe the typical cost for one is between 5 and 15% of their assets. Granger, is 5 or 15% of your assets normal?
I'd say that's not normal.
Okay.
You might want to look for a second opinion there, but I would say generally with most financial advisors, you're probably looking at 1 to 1.5%. But look, David, there's strategies out there where there's no fee at all. So your effective fee, depending on the strategies you utilize, could actually be under 1% in some cases.
Okay, so I could be paying 5 to 15% or potentially 0%.
Absolutely. And here's the thing, David. Most people out there, they don't even realize they're paying fees.
Really?
Or they think they're paying an administrative fee and that's it.
Okay, important questions to ask. Question number 4, let's do taxes. A recent survey found that over 30% of every dollar a retiree spends goes to pay taxes. Rick, are we really looking at nearly a third of our money going to Uncle Sam?
We could be unless you have the right strategy. That's why it's important, again, when we sit down with our clients, is to develop a tax plan. So if you don't have a tax plan, you need one.
For anybody that just joined the program, we talked at the top of the show about how tax planning is so important. What kind of savings could we potentially be looking at?
I mean, you could save tens of thousands of dollars, maybe even $100,000. It depends on your portfolio.
Okay, that's an attention getter right there. Could be hundreds of thousands of dollars. Question number 5, when it comes to income taxes, is it possible, Granger, to receive retirement income from our life savings without having to pay those income taxes?
It is, but you're always going to have to pay taxes to get to that point. So I think some people who say, hey, I want to get to a lower tax bracket or a zero tax bracket, have to realize you still have to pay taxes. We believe they're on sale today. If you're of that belief, I would suggest you start doing something with your portfolio.
Again, you just said zero tax bracket. I
I
imagine
want
there's
to
a line.
remind people out there, the tax code we're presently under will expire December 31st, 2025. You got to ask yourself, do you believe taxes are going up then?
And I think we're all voting yes on that one. All right, get in line because the clock is ticking. Question number 6. Obviously, as we approach retirement, our thinking can change. So, Rick, is it more important to focus on growth or avoiding big losses?
Avoiding big losses if you're approaching retirement. In our early years, we're thinking accumulation. In our retirees years, we're thinking distribution. So it's very important. That doesn't mean you can't have growth. Don't get me wrong there. But you probably need to dial back the risk.
Okay, so I'm going to reiterate this. So protection and growth,
Yes.
they can coexist in retirement.
They can.
Okay, solid strategy. Question number 7, who doesn't love guaranteed money? Annuities are an investment that can do that for your income. So Granger, why do you think so many people are hesitant to buy one?
I think a lot of it's just conventional financial wisdom, or they've heard somebody say, hey, don't do this, don't do that. But you got to realize annuities have changed a lot, and there's a lot of different ways you can structure them to accomplish the goals that you want to accomplish. So I wouldn't look from just a standpoint of income. You could look from growth, you could look from principal preservation, long-term care. There's a lot of different ways to structure them.
Yeah, I think it's very important to get educated on those before you write them off. All right, we're at halftime of 15 and 15. We are going to pause the clock. A lot of great information, which is why Rick and Granger have a great offer today exclusively for our Finance Report viewers. For the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement, a game plan to get you where you need to be. The number to call, 423-401-9933. That's 423-401-9933. Back on the clock we go. Topic number 8 of 15 and 15. Rick, we've worked decades to get to retirement. We want to travel, see the world, spoil our families. So how do we go about maximizing our lifestyle goals in retirement?
I would say that all of that is great. We need a retirement plan. We've talked about that. The biggest thing is most folks out there are going to have retirement dreams or goals. Those cost money, so we got to find out what it's going to cost and build it into the plan.
Understood. Granger, fees. I've heard them compared to termites just eating away at your retirement savings. What have you seen fees do to some people's retirements?
I mean, it absolutely can destroy it. But I think there's certain fees out there that could drastically change your portfolio in a positive way. I will say that I sat down with a client a couple years ago. We looked at their portfolio, tested their actual variable annuity, and they were paying over 4% in fees.
4%.
So you have to understand what you're paying. If you feel like it's justifiable, then so be it, but you at least want to know what you're paying.
Absolutely. Want to know how your money is working for you. Question number 10, Rick, 401ks. Lots of people have them. Lots of people rely on them for income. But how common is it for parts of someone's 401k to be underperforming?
Well, it could be. It depends on how you're investing and depends on who's doing the work for you in that area. So you may look and see the markets are up today and you say, wait a minute, I'm losing money. So it depends on the fund that you're in. And so that's the time you may want to have a discussion with your financial advisor and see what's pulling that portfolio down.
Yeah, sure. No harm to pop the hood and see what's going on under there. Granger, question number 11. Once upon a time, pensions were standard. You collected Social Security, and a few mutual funds and bonds carried you to retirement. But how have the rules to retirement planning changed?
Well, now you don't see a lot of pensions. Social Security is uncertain. If you get there, you may end up having to pay taxes on Social Security you didn't know you were going to have to pay. We've seen, obviously, the volatility in the market, so it has changed drastically. That's why I think it's important to sit down with somebody, look at your portfolio, as you said, pop the hood, see if there's maybe just a few tweaks and changes that can be made that can really help extend your portfolio life.
Some solid advice. Question number 12. Rick, we've discussed that really being ready for retirement is both a mental and a financial question. So how can someone find out if they're really ready for retirement?
Well, I mean, the biggest thing is knowing how much you're going to spend in retirement. And I think it needs to be a discussion where you're educating yourself. Most people, David, you would be shocked that have no idea if they're ready for retirement. They're hoping they have enough money that will last them throughout their life.
And I assume hope is not a solid retirement strategy?
Absolutely not.
Okay, go with the written plan over hope. Have the written plan and some hope mixed in. Question number 13, Granger, focusing in on long-term care. What can people do to prepare for that without having to buy some huge insurance policy?
Here's the thing. Not only may they not be able to buy the policy, do they qualify for the policy? So that's another question you got to look at. And then another step you would look at is, can I self-insure? And when I say self-insure, once again, utilizing a tool out there where you can put a portion of your money, not all of your assets, that can extend that long-term care benefit to you should you need it. And if you don't use it, you don't lose it.
And again, people really need to be focusing on their health care for retirement.
70% chance, again, that when you turn 65, you're going to need some type of long-term care assistance.
Yeah.
Now, if I told you there's a 70% chance you're going to lose your entire portfolio today, you'd probably do something about it.
I would definitely do something about it. 70%. Yikes. Big number right there. Question number 14, Rick. There are always going to be strategies that people can use to plan for retirement. Lots of advisors believe in lots of different things, but do you think buy and hold is still a valuable retirement strategy?
Can be, but we're not going to say, I think everyone's different. And I think when you are moving into retirement, a buy and hold strategy may not be the best for you, okay? Again, I always say when you're moving into retirement, most of the time you want to begin to dial back the risk. On average, David, we have a bear market about every 7 years. So again, a buy and hold may not be the right thing for someone.
You also said everybody's plan is different. You need a customized retirement plan, correct? You don't need something that your neighbor has.
Absolutely. I mean, it's got to fit you.
Absolutely. Customization, very key for your retirement planning. Final question of 15 and 15. Granger, is for you. This one has gained a lot of steam. Cryptocurrency. What is your advice for someone that wants to put a whole bunch of their retirement savings into crypto?
Well, I mean, look, once again, you're talking about retirement. If you're young and you want to throw some money at it and hope for the best, I can see it. But for retirees and those that we typically deal with, I don't see a problem with a small portion in it. But if we're looking at the majority of our portfolio, I don't think we want to put that much at risk. I mean, it's such a speculative asset. We don't know what's going to happen with it regulation-wise. So I think it's something I would shy away from, at least a large portion of my portfolio.
Okay, and maybe some fun money, as you mentioned. Fun money. Let's see what happens, not rely on it. Gentlemen, awesome stuff right now. You are off the clock, 15 and 15 in the books. A lot of great information, and for that reason today exclusively for our Finance Report viewers, Rick and Granger have a great offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 423-401-9933. That number, 423-401-9933.
And we're now going to take a trip back to 2008 for a moment. To say that was a trying time in this country would obviously be an understatement. We should have learned from that stretch of market volatility. My question, gentlemen, is this: have we?
I don't know that we have. I mean, obviously, this was a huge drop, and,
Sure.
and that affected a lot of retirees. But, you know, we had something similar in 2000, and by the time that people recouped their gains, we've lost them again. So historically, the markets have gone up. But I think the thing that you see that can be problematic is when we have years like 2017.
Sure.
All of a sudden, nobody's concerned about risk. Everybody wants to be in the market.
It's a good time.
and that emotion carries with us. And then all of a sudden we have a 2018 fourth quarter, and once again now, hey, I'm panicked. So you have people out there that are trying to decide, what do I want to do? And that's where we go back to retirement planning, putting a plan in place, a written plan in place that's gonna suit you for your entire retirement, which could be 30, 40 years.
You guys have both been doing this for a long time. I want to ask you this. How often do you find people walk into your office for a first visit, a first appointment, and you see very quickly they have far too much risk for their age and stage?
We see it quite often, Mallory. And again, going back to this, I think people have short-term memories because we were on such a long bull run. But folks come in, and to be quite honest with you, they have no idea in most cases how much risk they're taking on. That's why Granger and I, we test those portfolios. We test each fund. We're able to tell them, here's what's drawing your portfolio down, and here's what's making it successful. And then hopefully if we're working with them, we're going to do some different things and allocate differently that we hopefully get them on a positive road.
Absolutely. So let me ask you this then. How hard is it sometimes to convince someone it's time to go, it's time to make your move?
It can be difficult. I mean, once again, because everybody wants to be 100% in equities when the markets are going well.
Sure.
And then I want to be in cash when it's going poorly.
Yeah.
But you have to realize, what is your benchmark? Are you trying to beat the S&P? Are you trying to beat the Dow Jones? If you are, then you probably have some money you can afford to lose. So a lot of times when we ask people, how much of your portfolio can you afford to lose? The answer is none. But yet you still have people that want to take a lot of risk. So I think it's finding that right balance.
All right, we don't have a crystal ball here, but looking forward, what should we all be aware of right now in terms of the market?
Well, I think what you have to look at, Mallory, and a lot of it depends on your age. If we look at inflation, if we look at fuel prices, if we look at the government continuing to spend and spend, ask yourself, what do you think 2023 is going to be like? I don't have a crystal ball, and I'd like to say it's going to be great, but none of us know. So I always say, have a plan. Let's plan for volatility.
Absolutely. For those who are being told growth-only model, that really is the way to go, what have we learned from the past?
Well, I think we've learned that we're going to have a 2000. We're going to have a 2008. We're going to have a 2020, right? Those are going to happen. So we have to be prepared for that. So when we talk about growth only, when you're going to conservative strategies, it doesn't mean that everything's in conservative strategies. You can still have some growth in your portfolio. But we got to realize, if you're a retiree, you're not playing the same game that somebody who's 30 is playing. They have time on their side. If we're taking distributions from our assets and we have these down years and we're taking 4% out of our portfolio, what's happening? We're compounding those losses. We're making it harder to have a successful retirement.
Let me ask you both this. 5 years out versus 10 years out from retirement, what should our thought be in terms of risk?
I think you're getting into that red zone, that target retirement date. And again, I go back to what I said. I think you got to begin to look at how you're allocated and begin pulling back and taking some of that risk off and looking at some safer strategies, because the goal is you don't want to outlive your money.
No.
How long are you going to live? We're going to build you a retirement plan as if you're going to live to 95. We want to make sure that you have enough money. If you live to 95, and we hope you do, that the money's going to be there for you.
Absolutely.
Yeah, and I mean, I would sit there and I would say, you know, once again, having money in the market is a good thing, right? But if you're a retiree, the S&P, the Dow Jones, the NASDAQ should not really be what you're basing your portfolio on. You need to be looking at strategies that are going to create income, that are going to protect your principal, that are going to be able to maybe help you in terms of long-term care. If you're not doing those things, these things, the 2008s, the 2000s, the 2020 are going to hurt a lot more.
Gentlemen, always great insight and guidance. Thank you both. Protecting your assets can be key at this stage, which is why exclusively for our Finance Report viewers, Rick and Granger have a great offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan just for you. This will allow their team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call right now, 423-401-9933. Once again, that number, 423-401-9933.
Before we go today, let's recap.
That's right. I think for anyone watching today, it's pretty clear that the both of you have a pretty incredible father-son team dynamic. I want to talk about what you feel really sets you apart from other financial advisors.
Well, we're a family business. That's important to us. We want to build relationships with our clients. This isn't someone trying to sell you something. We want to educate people. We believe if we can educate you, that you have enough understanding to choose what direction you want to go. Yes, we're going to give you advice, but at the end of the day, you're going to make that decision.
Yeah.
The other thing we help in, Mallory, as we've mentioned earlier, we help folks with Medicare supplemental options. If you think about people getting ready to retire, they're going to go on to Medicare. So we're not sending you down the street to see someone. We're going to help you under the same roof.
Yeah.
Granger, how do you feel the planning process at Hughes Retirement Group is really different from the big box firm experience some retirees go through?
Well, I think we go beyond just the plugging it into some software and saying, hey, here's what we need to do.
Yeah.
We're really going to nail down, and believe it or not, you wouldn't see how many people come in, they have no idea how much they want to spend in retirement.
Yeah.
They've got this, once again, this bucket of money that they don't know what to do with. They don't know what their risk reward is. They haven't tackled long-term care. They haven't tackled Medicare. So there's a lot of different things that I think are not looked at or overlooked, so to speak. Another one we've talked about is taxation.
Yeah.
And if you're not planning for those things, and if you're not putting a written plan into place to take care of those things, you're potentially costing yourself thousands, if not hundreds of thousands of dollars.
Huge.
And I think, again, Mallory and David, a lot of financial advisors are helping you through the accumulation phase, which is very, very important.
Yeah.
Okay?
Sure.
Granger and I, our niche market is working with people that's getting ready to go into retirement, and it's going to be the distribution phase. That's important. You need to be invested differently, we believe, in the distribution than the accumulation.
You've talked a lot today about income planning. For those who have spent years picking away at that pile of money, what steps can they take right now to jump into income planning?
Well, I think as far as income planning, you know, if we think about things that are safe, okay,
Yeah.
you're relying on Social Security. You may have a pension. You may have some money in an IRA. You may have an annuity. We believe in different streams of income, separating those buckets, okay? We think that's very important.
Yeah.
And I would say, I mean, income's so important because, once again, if you have this ambiguous bucket of money that
Sure.
you have to distribute, how much do you take? How often do you take it? Whereas if you can divvy it up and say, okay, I'm going to make sure that I've got a bucket of money that is going to meet my needs, and if something happens like a 2008 or a 2020, I'm not having to dip in and compound losses. So just by positioning our assets in the right buckets, it can save us a lot of heartache.
Sure.
And Granger, what difference have you seen tax planning make for retirement?
I mean, I think it's huge because it's so overlooked. And once again, part of it is people don't want to actually cut the check to pay the taxes.
Yeah.
Maybe they don't believe that the tax increases are actually going to affect them. They think, hey, yeah, it's going to affect people down the road. I think taxes are going to be higher down the road, but I'll be in a lower tax bracket. But I think from a standpoint of those people who have taken the steps to convert money today while taxes are on sale, I think from a peace of mind standpoint of knowing that all of those future gains, all of those future withdrawals are going to be tax-free.
And Rick, all of this being said today, you actually have something very special for our viewers who are watching at home.
Absolutely, that's right. For the first 5 callers that have saved $250,000 or more for retirement, I'd like to extend an invitation to give us a call. Our team will personally sit down with them and help them create their very own retirement plan. And Mallory, David will do this on a complimentary basis.
A very generous offer. Rick and Granger, thanks so much for your time and the great insight. We really do appreciate it. So for you at home, exclusively for our Finance Report viewers, Rick and Granger have a great offer. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan just for you.
This will allow their team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call right now, 423-401-9933, 423-401-9933. And from all of us here at the Finance Report, we'll see you back here next time.